Do you have a financial plan that you can stick with, whether it's great years, bad years, good 3, 4, 5 years in the market, bad 3, 4, 5 years in the market? Do you actually have a financial plan that you're confident in, you understand, and that you're going to stick with because, well, it makes sense? Hi, welcome back to another Money Not Math conversation. Today is Thursday, January 12th, 2023, and I'm bringing you another Money Not Math conversation because I love our country, but I believe our government is terrible at managing money and should not control our financial future. So it's my goal to help you and my clients to provide value to you, just like I try to provide value to my clients with these conversations. So thank you for taking the time to watch and or listen to this conversation today. I hope it brings you value. The topic for today, if you haven't caught on already, is developing a financial plan you can stick with. The article that I will be referencing and reading off of a little bit is from dimensional.com, and it's titled, "This has been a test, developing a financial plan you can stick with," written by David Booth, the chairman and co-founder of Dimensional Fundamental Solutions. So with that, we will move on with the article. I think it's really, really important because anyone and everyone can be confident when things are going well. But when things aren't going well, it doesn't take long to notice who's not really feeling that good about their plan, right? And a really good financial plan shouldn't be dependent on the market to make it a good plan. It should be a good plan regardless of what the market's doing. Okay, so with that, think back to December 2019. The economy was humming. Unemployment, interest rates, and inflation were historically low levels. But then what happened? First, a global pandemic hit. By the end of March, the S&P 500 had dropped to nearly 20% in value. Later in the year, scientists announced that they developed a vaccine and markets roared back. FANG stocks soared before giving up lots of gains. Meme stocks shot way up and fell back down. Bitcoin and other cryptocurrencies reached record highs and then crashed. Inflation spiked to the highest level most of us have ever experienced. I know that's definitely the highest I've ever seen. And Russia invaded Ukraine, sparking humanitarian crisis and geopolitical uncertainty. I don't know anyone who predicted all of that back in 2019, but what if someone had? What would you have done differently? That's the important thing here, is that all the time, you turn on the news any day, political pundits, economists, advisors try to predict the future, right? Well, one, no one can predict the future. No one knows what's going to happen. If they try to tell you what's going to happen, they're either lying to you or lying to themselves or just trying to sell you something. But second, with that, even if we could predict the future, what would change? Going back to what I said, a good financial plan should not be determined on whether or not it's good or not on what the market's doing. It should be good regardless of the market. Okay. So regardless of what the market's doing, we should be confident in what our plan philosophy is based on. And this is why. Let me continue on with this article. What if that person told you that despite all that negative news, the Russell 3000, which is basically the 3,000 largest companies in the world that's on the stock exchange, would average a return of 10% a year over the next 3 years? So what if in 2019, first someone told you all that bad stuff was going to happen? What would you have done? If the answer is nothing, good. Because then if that person told you that the Russell 3000 was going to have an average annual growth of 10% a year over those 3 years, you'd have been really smart to stay in, wouldn't you have? Yeah, and that's what happened. For those people who didn't get out, they just stayed the course, they had a plan they believed in. If they theoretically were investing in the Russell 3000, they would have received about a return of 10% a year over those 3 years. Would you have believed them? Would you have stayed in the market? Those are all important questions for you to answer for yourself. And also ask yourself are you confident in your plan? Because if you aren't, I strongly encourage you to go out and build one that you are confident in, regardless of the next 3 years are up or down. Because that's what happened. A yearly return of 10%, that's pretty darn close to the stock market's historical average over the past century. The conclusion I hope you reach is that it's unrealistic to think you can outguess the market. You're probably better off expecting that markets do their job of capturing the human ingenuity taking place every day across thousands of publicly traded companies around the world. And what they're basically saying there is, it's better to bet that the CEOs of these companies are better at growing their companies and making their companies grow and grow their money, so therefore growing your money by investing in them, than it is to try to guess when you should or shouldn't invest in these companies. All right, continuing on. What do I mean by markets doing their job? When news of the pandemic hit, markets adjusted and prices went down. In other words, when uncertainty peaked around March 2020, investors demanded a higher return to jump into the market. Then, when news of vaccine spread, the market adjusted its expectations accordingly. In the short term, there are often wild swings up or down. Making a change during either can be dangerous. The past 3 years were a good test of whether or not you had an investment plan that was sensible to stick with. So take a moment to think about why you did what you did and prepare for next time, because the next 3 years may be just as uncertain as the last 3. First, make sure your investment plan is sensible and based on financial science. Second, make sure it's realistic for you and your own unique situation. Even the greatest plan is no good if you can't stick with it during tough times. Invest in markets in whatever asset mix is right for you, or in other words, invest in a way that resembles your risk tolerance. If you're not sure, talk with a financial advisor who can help you. I don't make predictions, he says, this is David Booth, but he does believe in the power of human ingenuity to fix problems big and small, innovating the whole way. What has stayed constant throughout David's life is the power of people to make progress in the face of challenges. So through every historical negative event of our country, every single time humans have found a way to work through it and even thrive thereafter. As we've talked about in other conversations, oftentimes the best years in the market come right after the worst years in the market. So if you aren't in for the whole ride, you might miss the best years and the best opportunity to make money. So coming back to wrap up the article, we've seen it in the fight against COVID-19, where vaccines developed at lightning speed are now being administered around the world. We've seen it in the continued progress of gene therapy, which is revolutionizing the treatment of multiple diseases. So as we start 2023, let's remember the lessons of the past 3 years. Let's develop and stick to plans that take us through the short-term ups and downs of market fluctuations so we can capture the long-term benefits of human ingenuity. So with that, I hope this conversation brought you value. The most important thing I believe that he said is good financial plans should stand through both good times and bad. So if you don't already have a plan that you understand and that you're confident in, I strongly encourage finding someone you trust to sit down, have a conversation, and build that plan. Because regardless of where you are in your life, it's never too early to plan, and the earlier is always the better for long-term results. All right, so thank you so much, Tom, for your time. Please comment, share, and or like this post if you liked it, and let me know what your thoughts are, what questions you have, and what requests you have for future conversations. Thank you so much for your time, and I hope you have a great day. Thanks. Bye.